All right, we are live. So welcome back to Dapp University. So when is crypto going to stop crashing? It's been an absolute crazy bloodbath out there for the past several days. The past few weeks have been some of the craziest that I've ever seen in crypto since I've been here watching this space on a daily basis since 2017. Now, I was a part of the last major cryptocurrency crash that happened at the end of 2017, beginning 2018, and watched the bear market happen all the way through. And this still, is at the top of the list. So we're going to talk about all that today in our stream, talk about, hey, where could the bottom be for this thing? Is the worst behind us? What should we expect going forward? And really, why is all this happening? Because sometimes you just have to understand, make sense of the world around you. Because I know it's a scary time out there for a lot of people. Trust me, I've been through this, and this is still pretty rough. Okay, so we're going to talk about that. So if you're new around here, hey, I'm Gregory. On this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm, subscribe to this channel. And, right now is the perfect time to be watching the crypto space when a lot of people are going to be checking out. And one of the best ways you can do that is by, leveling up your skills and learning about crypto and blockchain, especially blockchain development, which will help you do on this channel. So make sure you smash the like button, like I was saying before. I lay these videos out for more about blockchain. And if you want to master blockchain step by step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. So we got people jumping in the chat here. Let's see. We've got Culture Hives, Technically, Automatic Beats, Tom, Tebo, Rodrigo. Let's see here. Lee, Dennis, Lex. Welcome, Robbie. All right, so let's jump into this. Let's talk about the crazy the crazy crash that's been happening the past several days, particularly last night when we saw major cryptocurrencies like Bitcoin and Ethereum reach price levels that I don't think people were really anticipating to arrive in 2022, and if they were, definitely not as fast as they were. So we talked about yesterday on the stream that Ethereum's broken past its previous all-time high of about $1,400. Bitcoin got back down and basically kissed its all-time high above about $20,000. It got into the 20s on certain exchanges, and this is not something that many people were anticipating. So let's talk about the potential. We'll talk about why this is happening, what the potential is for a bottom on crypto, how long this is going to last, what you could expect. So I want to recap some of the factors that are causing all this in case you are just checking in, haven't been watching these live streams. Again, we do these live streams Monday through Friday on this channel. So if you want to stay plugged in the crypto space, now is the time to double down and watch it like a hawk, because this is where the most opportunity happens. So make sure you subscribe, like I was saying before, turn on notifications, and catch up with everything that's going on. So anyways, yesterday we talked about the big factors influencing what's going on in crypto right now is definitely the macro environment, the macro economy. I don't pretend to be a macroeconomics expert, but it doesn't take a genius to see that things have changed, that monetary conditions have tightened, that a lot of the moves from the Federal Reserve are essentially what popped the bubble in both the stock market and the crypto market, and we've been witnessing that pain for 6 to 7 months since that happened. Okay. And then, of course, cascading on top of that, we have all these pieces within the crypto ecosystem that run off of, different financial instruments that involve leverage that have been getting unwound. Hedge funds look like they're starting to blow up. Major platforms like Celsius looking like they're, not doing well. So let's talk about that as a first thing. So Celsius is definitely something that we talked about yesterday, which is basically a savings and lending platform that is centralized. So it's a website like a centralized cryptocurrency exchange where you can deposit cryptocurrency and basically earn passive income for doing that. Like they'll pay you yield on top of it. So if you have Bitcoin, you want to deposit Bitcoin and earn interest on it, you can do it that way. And that gives a benefit to an end user because they don't, you can't stake Bitcoin on the Bitcoin blockchain or anything like that. So you could put it on a website and then basically earn passive income that way. So that's what the service does. Now on the back end, somebody like Celsius, they have a few different strategies, to my understanding, on how they provide that yield. But one of them for sure, all right, is basically using it in decentralized finance or DeFi on the back end. And so we were watching a lot of but we were watching a lot of risk unwind yesterday, especially with Celsius, because the collateral that they were posting to basically give this yield on DeFi platforms was getting really close to its liquidation price. So basically what that means is they're taking user funds and, earning yield on decentralized finance platforms. And a lot of these funds, like the price of cryptocurrency is crashing down so far that it was getting to the point where if it crossed this, like the protocols would just liquidate. It would just take the funds off of the out of the protocol, and they would essentially, get eaten alive. Okay, which when that happens, essentially, you takes all this crypto and then it just puts all this sell pressure. So you have like an insane amount of crypto that's sitting here earning yield, and if it unwinds the protocol, that causes all this sell pressure, which can cause prices to just go down further and further and further. All right, so that's a big sort of risk that has even contagion risk to it, where it can affect other parts of the decentralized finance ecosystem, the crypto ecosystem. When stuff crashes, it can make everything else just kind of spiral out of control. Now, the other thing is we're seeing lots of reports of potential, sort of stop loss hunting with some of these liquidation prices. So basically, Celsius was, powering a maker DAO Vault, which powers the DAI stablecoin. Okay. And you can see their collateralization ratio and the collateral locked and the current price, and they have a liquidation price. And so basically, I'm seeing talks of other people saying that there are certain maybe funds or whales out there that were trying to liquidate Celsius. So they were trying to manipulate the cryptocurrency price to go further and further and further down at that liquidation price so that they could just wipe it away clean. And that Celsius would be liquidated, and they can sort of play their whale games, maybe buy up a lot of cryptocurrency on the cheap, okay? Or maybe just they want to put Celsius out. There's lots of reasons why they could do it, okay? And so in order to fight this, like we kept seeing, Celsius top off their liquidity inside the protocol, which basically means like as the cryptocurrency prices reaches closer and closer to the liquidation price, they just keep adding to it to try to bring the liquidation price down, okay, so that they can avoid that event. And that has this even crazier thing, whereas you get two people fighting one another, the one who's trying to manipulate the price further and further and further gets closer to that liquidation price, and the liquidation price keeps moving down, makes all the cryptocurrency prices move down. So that's one factor in what we were seeing yesterday, okay? Again, some of this is hard to totally verify, but the on-chain data does point to something like that happening, okay? So that is another factor. Definitely what's going on with Celsius. This is, sort of like a round two for like the Terra Luna disaster that happened, only about 3 weeks ago. I mean, it's just crazy how much this stuff is happening in such a short amount of time. So basically, we saw the Terra Luna stablecoin unwind. We already had massive problems with the macroeconomy that was affecting crypto stocks and everything else. And then Terra Luna exacerbated the issue. In a similar way, we're seeing, the macroeconomy, we're seeing all these types of things really put headwinds in the face of crypto. And then you have these crypto-specific problems like Celsius and Terra Luna that are exacerbating the issue, okay? And so, the one thing I'll say about this, or a couple things I'll say about this, these are the type of things that happen whenever markets completely unwind, okay? Because crypto's got all these different pieces inside of it that, essentially work when markets are going up, and then they break when markets are going down. And, whenever they break like this, sometimes that gives the additional sell volume, and you completely exhaust that, or you have to completely exhaust that before, prices can start to stabilize and actually form a bottom. Okay. What I want to do now is actually look at, what has happened to the Bitcoin price in particular as of yesterday, to talk about, some historical levels on where we could, potentially see a bottom and a reversal for this. Okay. So basically, let me just pull this up. All right. So let me pull up this here on my screen. So, Bitcoin in particular reached a historical price level, which looks like in the short term at least is being defended, which is this 200-week moving average. Okay. So I'll put it this way. I'm not a big technical analysis guy. Okay. I don't really think it's always super useful, especially on, short-term time horizons. But on a bigger picture, I think it's worth considering. Okay. Partly because a lot of people look at these price levels. So Bitcoin, came down and hit its 200-week moving average, which historically, is sort of a level that people start we start seeing bottoms in past crypto cycles. Okay, so we see it bounce off the 200-day moving average here, bounce off 200 moving average here. When the massive crash happened and the flash crash in March of 2020, okay, we saw it just wick down below, significantly below 200-week moving average. I think I might have said day a minute ago. I meant to say 200-week. And then continue to trend higher. And there have been lots of people who are like, hey, we think Bitcoin's in a bear market. We know we've seen this story before. We're waiting for it to get the 200-week moving average before we start, setting our buy orders, because we think that's going to be the sort of like the generational bottom opportunity for Bitcoin. Now, if the past is any indication of the future, we could that could be our bottom level for this particular correction. Now, a couple of things to say about that. So that's one, is the actual price level. The other is the selling volume. So basically, we've seen a pretty big spike in sales volume over the past day or so. We saw a big spike in volume here on this leg down, a big spike in volume here on this leg down. Okay, and so some of what we're feeling right now does feel like a capitulation. Okay, so a capitulation is basically the end where you have people who are strong holders who just start like kind of freaking out, or they need the money, or you start seeing hedge funds blow up, you start seeing all this stuff happen, all this risk unwind, and the market sort of puke, and you start getting these levels that people just like are just completely panicking at. Okay, so there's a lot of things that feel like a capitulation right now. All right, a lot of data that looks like a capitulation. Now, that being said, that doesn't mean that we're just going to go on to a recovery from here, okay? Because, whenever you see this 200-day moving average, there are many times, so I keep saying 200-day, 200-week moving average. Whenever you see this, sometimes you will see it hit it twice, okay? So you go in the past history, it'll hit it twice, or we could just bounce off of it several times, okay? So another thing I'll say here is that, with this moving average and the potential for a bottom at this level, it does not mean that this is the long, like that we're just going to go up only from here. Like we could start to just accumulate in this range and sort of bounce off this level before, crypto ultimately trends higher over time. We don't exactly know what that's going to look like. And the other big thing about trying to use the past to forecast the future is that we are in a completely different economic environment than we have been in for the past really decade of Bitcoin's existence. Okay, Bitcoin's never really been through a major recession, which I think that we are a part of. Okay, and we don't have the numbers out for the GDP growth for a little while. Okay, but there is the possibility, odds, in my opinion, point towards us being in a recession right now, okay? Because we had negative GDP growth in Q1 of 2022. The odds are that we will have negative GDP growth in Q2 of 2022, which we'll wrap up here shortly. So we've never seen crypto go through that before. Now, do I think that means that crypto is dead or over by any stretch of the imagination? Absolutely not. Because sure, people talk about crypto, only working in a risk-on environment. Crypto might only go violently parabolic in a risk-on market, but that doesn't mean crypto can't grow back to where it was in a higher rate environment. Okay, I think that's kind of a false assumption. Okay. The other assumption there is that we're going to stay in a high rate environment for a really long time. Nobody knows exactly what's going to happen either. Things are looking pretty ugly out there right now in the broader economy. And, I'll put it this way. People who have strong influence over that are probably starting to get a little nervous about their jobs. And so I think we could see some policy changes sooner rather than later on the grand scheme of things. I'm not saying this week or this month or next month, but, at some point, I think people are going to start saying, why is this happening? And why do politicians have so much influence over the price of our homes and our assets and our commodities and all this type of stuff? So, I don't think that can last forever. So that being said, with crypto, the other thing I'll say is in 2017, 2018, when we went through this stuff, we were still in a low rate environment, relatively speaking, although Fed did raise the interest rates, and I believe it was 2018, right, at the end of that bear market. Okay. which is kind of the final death nail in the coffin for the price trend. Sort of marked the bottom. But, you know, back then, like, you got two factors. You got the high rate environment recession that people are worried about now. But back then, like, we didn't, like, the real question was, what were the use cases for crypto? You know, we had Bitcoin and we had Ethereum, we had ICOs, we had smart contracts, but we didn't have DeFi. We kind of did, but not really. We didn't have the DeFi that you know today. We didn't have, you know, NFT. Well, we had NFTs. We did not have the NFTs that you know today. Like, we had CryptoPunks at the beginning of 2018. We had some really early NFTs. We had CryptoKitties, right? But we didn't have the user base of crypto that we have now. Okay, we didn't have layer 2 scaling solutions for Ethereum. We didn't have all these other EVM compatible blockchains, all these other smart contract platforms with real users. We didn't have, you know, Ethereum 2.0 proof of stake coming in to where you could actually stake Ethereum cryptocurrency and earn passive income reward on it. We didn't have all this stuff. We didn't have all this robust wallet infrastructure where you could buy crypto with 2 clicks of a button. Everything was like, buy it on a sketchy cryptocurrency exchange, you know, transfer it to a wallet, and then, you know, do what with it? Flip coins with 4 other people in a bear market where the price is probably not going to go up. Like that was the state of crypto in 2018, 2019, or early. Okay. So that's not what's happening now. Now, the old saying goes, don't fight the Fed, right? Like, you know, they have a very strong influence over pretty much all financial markets right now. Okay. And, you know, we don't know what's going to happen with crypto. You know, trying to use past history to predict what's going to happen in the future is not always going to work, especially when a lot of the assumptions that made the past work, or some of those assumptions won't hold for the future. Okay. And that's just sort of true in life in general. But yeah, so that's what I'd say on the short term. So, you know, could we be approaching sort of a bottom capitulation territory for crypto? I do think it's possible, because we're starting to get to those price levels where people are starting to, like, really question whether crypto is dead. Like, what's the future of it? We see massive legs down. Like, that's what a capitulation feels like. Now, hear me very clearly. I'm not saying we're at the bottom. I'm not saying we're at the bottom. I'm not telling you to buy crypto. I'll tell you, me personally, like, you know, this is one of those times when I personally would be patient before I made any moves, because I don't think we're going to see a V-shaped recovery out of this. And if we did, you know, I think we'd still take some time before we reached back up to new all-time high. Okay. But I'm just entertaining the possibility that this could be sort of the puke your guts capitulation moment where we start to accumulate after this, because it's pretty ugly out there. Okay, it's pretty ugly. It says don't buy anything right now. That's one of the reasons that prices are going down. Is, I mean, who wants to buy? But at some point you have to understand. At some point you have to understand that there's so many high conviction long-term holders in crypto that at some point the price gets low enough where somebody says, all right, you know, if I buy this now and it just gets back to its previous all-time high, then I'm going to make, you know, 10x on my money, or, you know, 5x on my money, or whatever. And for a lot of people, they're going to be going, that's a bet that I'm willing to take, even though we're in a recession, even though we're in a high rate environment, even though we're blah, 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 blah. At some point, the price gets low enough where it just looks attractive. And some people will say, well, hey, that doesn't make any sense because cryptocurrencies have no intrinsic value, blah, 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 blah. It's not like a stock, or if you bought enough of it, you have controlling interest in a company. I get that, but there's enough people who are just taking the big, broad bet that crypto, you know, major cryptos like Bitcoin and Ethereum for sure, are going to trend higher over time. That's the assumption. That's my assumption. And at some point, you just make the bet. You make the bet. It's a risk-reward scenario. If it's already gone down so much, like, what's the chance that it's going to go down another 50, 80%? I'm not saying from this price level. I'm saying somebody's price level, they're going to say, hey, you know, could this go down to 50%? Maybe, but it could, you know, 10x. Like that's a favorable risk-reward scenario. That's the type of environment where I did a majority of my crypto investing, you know, down through some of these price levels. Okay, we're talking about, you know, Bitcoin sub $10,000 like that, when everybody was like freaking out, like what's going to happen? Like that's where I got a majority of my Bitcoin. So, and that's how we think about things. Okay. So another thing to watch out for from the Fed is this week. Okay, and this is why I think the markets have been panicking quite a bit. Is we saw the inflation numbers come out on Friday. We talked about this, where, you know, inflation is higher than people expected. All right, the inflation numbers came out on Friday. I can't remember what the exact numbers were, but I think people were expecting inflation to be in the low 8%, and it was like in the higher 8%. So it's a little bit off. I think it's probably a little bit of overreaction. But, you know, the whole point is like, oh, we overshot our estimates, which is not a good thing. Inflation is definitely not transitory. And therefore, the Fed's got to get inflation under control. And that's when people are starting to worry that they're going to hike rates harder and faster than they have communicated in the past. So, you know, the market has been pricing, up until this point, the market has been pricing in 50 basis point rate hikes, and this has been basically just been moving targets at the beginning of the year. People are like, oh, the Fed's going to start raising interest rates. Okay, awesome. Quarter basis point hikes to start off with slowly until we get inflation back to our 2% target. And then, oh, Fed's going to raise interest rates now 50 basis points. Okay. And then now we're seeing the Fed's going to probably raise 3/4 of a basis points. And that's what the market's pricing in expectations for right now. Okay. So that's what we see here. All right. And that's another fear that sort of entered in the marketplace. It's had a big factor on the price action that we've seen over the past, you know, week or so in all risk assets, particularly with crypto itself. Okay, so we're gonna get clarity on this week. The Fed is meeting this week. We will get the results of that after they meet, and we will see what their intention is, whether it's to hike 50 points or 75 basis points or something maybe even worse. All right, and what that's going to do to the overall markets. So, in terms of when, you know, crypto could find a bottom and resume an uptrend, I think whenever we feel like there's clarity on what's happened with the macroeconomic scene, right? When we think that inflation has finally, well, inflation does not seem out of control anymore, and whenever we see that we get some clarity on what's going to happen with interest rates, and that, you know, interest rates aren't going to just like keep skyrocketing up. And that's the other thing is I don't think that like there's this false assumption that the stock market and all this stuff can't go up while interest rates are higher. Okay, that's not true. It's probably just not going to go up, you know, in like with bubblish velocity like it did in the past. It still could, okay, it definitely still could, especially with assets like crypto. But I think the real thing is to get clarity that rates are not just going to continue rising sharply and quickly. Like that's definitely not an environment that risk assets or crypto can trend higher in with confidence. Okay, they might, but most likely not. But an environment where rates aren't just, you know, ripping, but they're still high, like that's still an environment where crypto can grow legs, in my opinion. So let's see here. Somebody says a reverse trend doesn't really happen in one day. Bear market still here. Probably will go down a bit more. Yeah, it could for sure. It's definitely not going to reverse trend in one day. It could. It could. We've seen, you know, trend reversals happen pretty quickly, but they take more time to grow legs and really become apparent. Any method for predicting the bottom? And that's the other thing is it's not, you know, I wouldn't try to predict the bottom with any degree of accuracy. Okay. You could look for signals to try to see, like, whether you think you're close to a bottom or not. But trying to catch it, I don't think you'll find a single investor who has had a career of more than 20 years who's accurately called bottoms on multiple occasions with a high degree of accuracy. You won't find many. If you do, they're probably not going to tell you about it for clout. They're probably insanely wealthy. Somebody says 376 people watching and only just 52 likes. Smash the like button. Yeah, totally. Smash that like button if you haven't already. Do I have any specific times to go live? Yeah, we go Monday through Friday on this channel. Typically about 9:45 a.m. Central Time. We got started a little bit later today. What do I think about crypto jobs? It's still a good time to be working in crypto, in my opinion. I know a lot of people kind of have some FUD about the industry, but trust me, it was way worse in 2018, 2019 in terms of, the state of everything. And there were still people, like there's still a ton of demand for blockchain developers back then. Now, if you're working at some really sketchy crypto startup that, is not properly, not well funded and doesn't have a good product market fit, like that job may not have, an indefinite amount of, you mean that job may have some risk associated with it, right? But in terms of the opportunity for the broader crypto market and blockchain development, it's still good. It's still really good. Somebody says, how will this recovery be, you think, with funds being involved in this upcoming rally? Probably. I'm not sure I understand the question. I was talking about Coinbase layoff. So basically, a lot of that's got to do with overhiring that happened at the peak of 2021. Let's see here. Can you make a video on ERC 1155? How to code them? That's a good idea. Somebody says coding live stream last week was a hit. Yeah, awesome. I'm glad you all liked it. Let me know if you want me to do more of those coding live streams. Somebody said Coinbase NFT marketplace flopped. Yeah, I think the numbers on that particular launch were a little underwhelming. Somebody says decided they paid off tuition and can DC at the bear market. Awesome. Congratulations. Can I explain the difficulty bomb in Ethereum is? Yeah, it's a good question. So, let's talk about that and why it's important. So, Ethereum is undergoing the proof of stake merge probably later this year. All right, that's still my bet that we're going to see it. Maybe like September-ish, something like that. The date kind of keeps moving around. People's expectations are kind of change. But that's basically, we're moving to Ethereum 2.0. We're moving from proof of work to proof of stake. And, whenever that happens, basically we're replacing their miners with validators. And instead of mining new cryptocurrency, whenever you create new blocks in the blockchain, you take cryptocurrency, you lock it up, and you stake it, and then you earn passive income reward as a validator for doing that. That's hence proof of stake, right? So Ethereum 2.0 is a separate blockchain, all right, as opposed to Ethereum 1.0 that you know and use today. And so that new blockchain is going to get merged back into Ethereum 1.0. Now, somebody's asking about the difficulty bomb. So the difficulty bomb is what exists on Ethereum 1.0 right now. And so, like I said, Ethereum 1.0 now uses miners. And whenever we merge to proof of stake, what we don't want is some like old blockchain, lingering on that still is maintained and has miners that has all the Ethereum cryptocurrency and code on it and stuff like that. right? We want that chain to basically stop like working. So like stop working, not be actively live on. So the whole idea there is you have this thing called a difficulty bomb, which mining is based off of difficulty. So you can make it harder and harder to mine until you essentially it's not profitable anymore with the amount of electricity that would cost to produce a new block. You're just not going to do it. So the difficulty bomb is the thing that essentially goes off that makes that the case, where it basically removes the incentive to keep mining Ether to maintain the blockchain. And that's a bomb that's supposed to go off in order to make Ethereum 2.0 sort of like the new chain that everybody moves toward. And so they're moving that difficulty bomb back to accommodate more time for the Ethereum 2.0 merge. It's a good question. All right, everybody. That's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you'll take a master shortcut entirely, I can become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You have to be an expert to get started today. I thought people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching Dapp.